What's up, team? Welcome back to another HPT live trade recap. Today is October 21st, 2024, and it was yet again another beautiful, flavorful, precious setup off the open, right? And you guys, I just to give you a little context, right? I am constantly targeting the market open, identifying better ways, more strategical ways to approach the market open because I know I used to struggle with it, right? It used to be one of my more difficult parts of the market to trade, right? So that's why I did so much back testing, data collection, diving deep into open print, the critical levels, right? Because these levels literally guide you. They guide you. And if you can learn to watch them properly with the appropriate tools, talking about moving averages, talking about EMA clouds, right? You mix that with the critical levels and you get that clear definition of who is in control of the level you cannot lose, right? So today, in this quick little recap, we're going to break down the trade we took. I took 2 trades today, and they fell under the same context, right? We were trading with sellers, right? So let's break right into it. Let me share my screen over here. We're going to go here, entire screen. And just like we usually do, I'm going to do a quick breakdown of the Discord, the pre-market plan, what we were looking at, etc., etc. Right? So if you come over here in the Discord, over to pre-market plan, you're going to see I post a bullish and bearish scenario every single day on SPY and QQQ. Right? So October 21st, 2024, SPY pre-market plan, bullish scenario, the gap fill. Right? So we were getting a large gap down this morning in pre-market. We are currently below previous day low when I was writing this, and the 1 hour time frame moving averages, right? That's bearish. For me to trade with buyers, I need to identify significant strength off open print and previous day low for possible long plays targeting end of day gap fill and previous day high. Okay. Bearish scenario, looking to trade with sellers today if they can maintain selling acceptance below previous day low, looking for healthy trends in bearish structure off open print for short plays targeting 580, 72, etc., etc. Right? And you're going to see here, I'm really showing a lot of detail with previous day low in the 50 EMA, right? So the 1 hour guides me. Every single trade I take, I'm making a move based off what the 1 hour is telling me, what the moving averages are telling me, where we are considering the critical levels, right? So that was our quick little graphical presentation over here on SPY, right? So now if I make my way over, you're going to see I wrote this morning around 7:30 when we were at previous day low, and you're going to see we got our move up to end of day, right? So we got a really large gap down, prices ripping up into end of day, right? Now we get bullish structure off open print, right? There's open print. We identify it right there at 58386. Why do we target the open? Why do we watch the open? Guys, very simple. The volume. Look at the volume here at 9:30. Why is this important? Hold on. Why is volume important? You guys know I say it constantly in every single video. Volume is important because we cannot move the market, right? I can't move the market. You can't move the market. So we have to have a clear, defined goal, purpose, objective every time we're trading. And that objective is not to predict price. It's not to assume or use our analysis to figure out what's going to happen. No. We use our unbiased critical thinking to identify what's happening. And based off what we're seeing, based off how price is reacting to the moving averages, to the critical levels, we then make our move. This philosophy has changed my life, and that is what HPT is founded on, right? So open print, we're getting a lot of volume. The $1 million question is, Josh, why didn't you not long open print, right? Beautiful not beautiful bullish structure, but definitely bullish structure off the open. And guys, literally, I didn't long it for one reason: the 1 hour time frame, right? If I whip out the 1 hour time frame, you're gonna see here. Let me just do this. I don't know why this keeps happening. Okay. So on the 1 hour time frame, right? You guys know I'm a stickler for my moving averages. So when we started to get buying above the 50 EMA here on the 1 hour, let me make this bigger. Let me take the EMA clouds off so that you guys can really see what I'm talking about because it is significant. Okay, so see here on the 9 o'clock candle, right? Notice where the 9D EMA is, right? That blue line. It is, if I can get, there we go. It is exactly, let's see here. It's $1 away, right? So price action gravitated $1 away from my blue line, right? Anytime we are extended meaning over 55 cents. If we're 55 cents away on the 1 hour from that blue line, I do not want to trade with the trend. Why? Because every single time we get extended, we get a pullback, right? And you guys got to put it in context. If you're getting extended and 9 times out of 10 you get a pullback, you have to put it in perspective. If you're getting extended from the 1 hour time frame, that means within the next hour you're going to get some sort of pullback, you're going to get some sort of chop, right? Price is either going to return to the moving average with a reversal, or it's going to fall into a messy chop consolidation period, and it's going to allow the moving average to come back up to it, kind of like what happened on this day, last Friday, right? We got extended here. We were very extended from the 9D EMA, and then we got chop for the rest of the day, for the next 3 hours at least, consolidating, allowing the price to gravitate back to the moving average, right? So basically all you need to know is do not trade continuations if you're extended. Be patient, right? So I did not want to trade with buyers at this level. And we had end of day right above us. And if I pull up SBX, you're going to see here, right? It makes it a little more clear because there's no pre-market data, right? The market looked like this. I did not want to long this. We're below the 50 EMA on SBX, right? That's a bearish signal. Well, end of day is, it's a little bit away, but it's kind of close. So my risk reward wasn't present. So I practiced patience, discipline, didn't make a move, accepted the fact that I may miss the long play. And guys, this is the thing. A lot of traders ask me about discipline, about patience. How do you know which trades to take? It's very simple. If you're not seeing your criteria, which we're going to go over in this video, you do not take the trade, right? If we're below the 50 on SPX, I'm not taking the trade. If my risk reward's not present, I'm not going to take the trade. There's no one holding a gun up to my head saying you have to take a trade. See, a lot of traders, they allow their ego to put the gun to their head and go, oh, dude, Josh, if you miss this trade, you're less of a trader. That's not a fact. That is not a fact. You are not less of a trader if you miss a trade. If anything, my hat comes off to you and I respect you more, right? Because you do not act on emotion. Instead, you remain patient, disciplined. You use your critical thinking to go, all right, listen, I may miss this and that's completely fine, right? You accept it. Acceptance is a high frequency emotion, right? Anytime you're under the influence of acceptance, you're making the right decision, right? So basically, I decided not to take the trade. Instead, I was going to see what happened here at end of day. And then once price rips up in the end of day, we started to get selling. And then we get this very large red candle shattering below the 50 and below end of day, right? Now, guys, this is one of my favorite things here. When you get a fake out above a moving average, right? It's almost like, a snapback times 10, right? Like it's almost like pouring gas on a fire, right? Anytime you're trending into a moving average and you trend above it and price reverses back below it, you are about to get a very strong move to the downside. And that's exactly what we got here. I'm going to go back to the SPY chart because it just paints the picture a little more clear, right? So now I'm going to throw my EMA clouds back on here. Let me go over to sets, HPT. And the HPT indicator really worked well here, right? Displaying the crossover, everything I needed to see. So anyways, we started to get selling, right? And now my 1 hour is making a lot more sense, right? Because the snapback's in full effect, right? Just like we were talking about, anytime you get extended from the 9D EMA, right? You can expect some sort of pullback. That's exactly what we got. Look at that. This is what we call the snapback. You're very extended from price, and then price snaps back into the moving average, right? So you have to get really familiar with what that's going to look like, right? You have to understand I've back tested this, right? I've collected significant data. Anytime you're extended, there's 9 times out of 10 you're going to get that pullback to the moving average. So what I'll do is go, okay, we're right next to end of day. If we get a pullback, what's that going to look like? How's that going to affect the overall market conditions, right? Causing price to move back below the 50 EMA, solidifying those bearish market conditions, right? So now we get a sell off, we're below the 50, and it's around, what is this, like 10:30, right? So now my criteria is present. What's my criteria? Very simple. Number one, identify the critical level. In this scenario, we got end of day, we got open print, we got previous day low. Okay, sellers just defended end of day and they push price back below open print, right? There's a break of structure here as well. That's number two, market structure, right? Market structure is your guideline. The market communicates to us through structure. It tells us, it shows us when the market is strong, you see very clear break and retest. When the market's weak, right, you're not getting those clear break and retest. Instead, structure's not holding, right? Structure would be right here, right? This is bullish structure that has just been invalidated, right? So now, number one, critical level. Number two, market structure. Number three, my favorite, the moving averages, right? And in my last YouTube video, I was talking about how moving averages are like a saw, right? A tool that can either decimate, destroy your house, or they can help you build it, right? You can get very precise. You can approach the market with surgical precision when you're identifying these setups. You just need to learn to use your tools properly. So we close below the 50 EMA. Once I see that, I whip out my 2-minute time frame. Now, guys, I just need my criteria, right? I need to identify that sellers are strong and they want to continuously push price down, right? So I do this a couple different ways, right? I do it using the 5-minute. I'm watching for a very nice trend. That's what we're getting, right? The price isn't that extended from my 9D EMA, right? And when it is extended, it's pulling back into it and sellers are defending it. Very important you learn to see that. Now I need my GBI, my green bar that needs to be ignored, right? So we get the sell-off. We get the green bar. The green bar comes in. Now I need one more component to enter this trade short. I need a red candle that's going to shatter the bottom of this green candle, right? So once this candle right here went below this green candle, very simple, very systematic, very repeatable. You guys know those are my favorite words, systematic and repeatable, right? The price sells off below it. So when the market looks like this, just to be very clear, when the market looks like this, I am buying puts. You need to burn this into your mind. What does your entry criteria consist of? What does it look like, right? Because come tomorrow, you need a way, a very simple presentation that when you see it, you act, right? That is what the GBI does for me. Keeps me patient, keeps me disciplined, right? Keeps me well informed, keeps me unbiased, right? I'm not assuming sellers are going to take this. Instead, sellers are showing me that they're going to take this, right? Does it work every time? No, it doesn't. Nothing does. But it has an extremely high probability of working for you when you're using your tools properly, right? So that's where we took the market short. We put our stop loss above this green candle, which was around open print. And guys, we caught a beautiful move all the way down to previous day low, where we then sold. Why did we sell, Josh? Because we got extended from the 9D EMA, right? So guys, once again, very simple 3-step criteria. Then we ended up capturing another short play here off previous day low when we got this GBI right here, right? So the moral of the story, right, is develop a very simple, systematic, ready, and repeatable approach that you can use every single day, right? Mine is identify the critical level, Identify large money, taking control of it using your market structure and moving averages. Once you identify that the large money, whether it be buyers or sellers, are controlling that level, bam, you whip into that 2 minute, you identify the RBI, you identify the GBI, because that's where I put my risk. Think about it. If I'm watching this selling here and I want to go short, right? This is why our strategy has been so surgically precise. It's been modified through years of failure, repetition, troubleshooting, right? Collecting data, right? This 3-step criteria that I unpackage and gift wrap to you guys, I spent years developing, right? Years developing it. Every part of it serves a purpose. It's very intentional, right? When I use the GBI, I'm using the GBI here because where else would I put my risk? I trade SPX. I can literally afford a 45 cent to 50 cent stop loss. That's it, right? So I need to be extremely precise while entering a trade. So once again, before we wrap up here, guys, our 3-step criteria. Number 1, critical level. Number 2, market structure. Number 3, moving averages. And then at the end there, it's the RBI and the GBI, right? So guys, I have 2 more slots open on the Trader Bootcamp promo, right? This is one payment, $99.99. You get 12 months full free access to my team with my team, right? Let me show you guys before we wrap off here. Look at the team. The team was killing it today, right? So my goal over here at HPT is not just to call out trades. My goal is to teach you how to trade, and not just trade, but to execute flawlessly. Look at this. I literally have traders in here taking short plays, took a trim when supposed to, right? Closing right here, closing right there. I don't want to put them completely on blast, but I am super proud of the way the team traded today. This was that drop right there before previous day low. This trader caught it. Absolute banger, right? So once again, the goal here is to get you involved with a team that not only puts in the work each and every single day, but supports one another, right? Because over here at HBT, teamwork is dream work. I love all you guys. Thank you for showing up today on this live. You guys are the best. You guys are the reason why we do this, right? Keep your head up. Keep pushing. I love all of you. Stay blessed until the next time.